Hello everyone, how are you doing? Hope all of you are having a great week. So, in this week, we are not going to meet in person, but what I promised, I'm going to record all of those PowerPoint slides and, of course, the problem that we will do at the end of the chapter. And I'm posting all those to Blackboards. So I would request you to watch these videos. And of course, when you are watching these lecture slides and the working problems, all of you will take notes because I'll collect all those notes. I just want to make sure that you watch the videos, you practice the problems that I did, and of course, you also practiced all of your homework problems. And you need to turn in all those when we're gonna meet in person in class, okay? So, in this week, we will learn about job costing, and it is chapter 3. So as I mentioned in our last class that there are three types of businesses. If you could recall, one we call service company, another is merchandisers, and another is manufacturing company. And manufacturers, they already have the most complicated type of cost structures as they handle like three types of inventories. Can anyone remember what are those three types of inventories that a manufacturing company will handle? Well, these three types of inventories are their raw material or direct material inventory, work in process inventory, and finished good inventory. So in this chapter, we will focus on job costing, but most of the manufacturers, they have two ways to record their costing. One is called process costing and another is called job costing. Although we're going to learn process costing in chapter 4, I would like to give you a little idea about process costing too. So process costing is used by the manufacturing company that produce extremely large number of identical products, right? And they usually use the same type of production process and almost all each and every unit cost equally same. For example, you can think of Hinge company that they produce tomato ketchup, and when they produce this tomato ketchup, all those tasks that they do, like cleaning, chopping all those tomatoes, mixing, bottling, it usually costs pretty much same for each and every bottle. So what the company usually do, they usually take the average of their entire manufacturing costs. So for processing, you will you're gonna average the cost of per product, and the example that I just mentioned, Heinz tomato ketchup, they will average cost per bottle of tomato ketchup, right? So I'm repeating, process costing is used by the companies when they produce extremely large number of identical products. Job costing is used by the manufacturing companies that produce very unique and customized products. And these type of companies usually produce only few number of different products or small batches of products. And they need to calculate the costs of all of their raw materials very precisely. They calculate their direct labor cost, overhead cost based on each and every product. So they usually do not do the averaging of their costs like the other manufacturers, those who use process costing. For example, custom home builders or fitness equipment manufacturers. So here in this chapter, we will learn about job costing. Remember, for any type of manufacturing company, they need to calculate three types of costs. Those are related to their manufacturing process. Number one is the raw material or direct material cost. Number two is the direct labor cost. And number three is the manufacturing overhead cost. And as we discussed in our last class, you can imagine their inventory process system. And you can also imagine that how they handle three types of inventories, right? One is their raw material, another is their work in process inventory, which is usually in their production line, and another is their finished goods. So when they are done with producing the goods and they will check how many goods they are selling, they will calculate the cost of all those goods that they sold. And when they're gonna calculate this cost of goods sold, they can follow again either job costing or process costing. So in this chapter, we will focus on job costing. And I'm repeating, what type of manufacturing companies use job costing? The companies that produce very unique and customized products. So we will take the example of one company, and the company actually manufacture different exercise equipments. Right, so this is one example, and you see that they produce different type of equipment. For example, cross trainer, treadmill, and of course for treadmill they have different models. And when they produce, you will check that it's not very vast or mass productions. For example, one of their product is called X4 cross trainer, and they're gonna produce only 50 units, and they define this batch of production work as a specific number of job, and they define it as job 603. So we're gonna focus on job 603, where this company is producing 50 units of X4 cross trainer. And of course, they also fix their date, how long they're gonna need to produce all those, and they will identify each and every cost very precisely related to these cross trainers. So to produce these X4 elliptical cross trainers, and they are going to produce 50 units, job number is 603. The company will first identify what are the direct material or raw material that they will need. So you will see some examples. They will need heart rate monitor, LCD entertainment screen, front and rear rolling bays, hand grips, foot platform, etc. That means they will have a long list of their direct material. And they will also identify how many of those raw materials they will need. That means number of this quantity of those raw materials. So this is how they will make a chart. We are talking about job 603, and X4 cross trainer, the company is producing only 50 units. They will identify all those raw material. They have some code name, and they will also identify how many units they need to produce this 50 X4 elliptical cross trainer. Then what they will do? They will purchase all those raw materials. They will issue their purchase order. They will receive all those materials. They will match their invoices with purchase order, and they will of course pay those bills. Company will maintain this type of job cost record sheet for each and every job. We are talking about job number 603, and where the company is producing 50 units of X4 elliptical cross trainers. So when they're gonna record this type of job cost sheet, they need to calculate all three types of manufacturing costs. Remember what I mentioned in our first class, each and every manufacturing company will record three types of costs that are related to their manufacturing process. And these three types of manufacturing costs are direct material cost, direct labor cost, and manufacturing overhead cost. So this company will calculate the direct material cost for producing these 50 units of cross trainer. They're gonna record all other costs too. And then they will divide it by 50, as these costs are for producing 50 units, and this is how they will check what is the cost for 1 unit of X4 elliptical cross trainers. So what they will do, they will purchase all those direct materials that they need to manufacture these cross trainers. And I already mentioned how many quantities they need, and it will be a long list. So this page is just showing only a part of those direct materials and how many units they need, and they will list all those unit costs. This is how they're gonna multiply, and that will kind of give their idea what is the total direct material cost for job 603. That means what is the total direct material cost for producing 50 cross trainers. Now they will also record their direct labor cost. Now you can just imagine, for a manufacturing company, they will have many employees. They will have different floor employees, or maybe some engineers, or different type of employees or workers, right? So they will keep a labor time record sheet for each and every person who who is working to produce all those cross trainers. That means who are involved in that specific job. So they gave you one example. One of their employees is Hannah Smith, and her working hourly wage rate is 20 bucks, and this is her weekly work schedule, and she is working for different types of jobs. Then they will identify how many hours Hannah is actually working for job 603. So Hannah, of course, will keep the time, start time, end time, and this is how they figured it out that Hannah actually worked like 5 hours on December 2nd, 8 hours on December 3rd, and they're gonna multiply with her wage rate, and this is how they will calculate what is the cost that they paid to Hannah for that specific job. And if they figure it out, they have 10 or 15 employees who are working for that specific job, they will calculate each and every person's wage rate and the total cost. And this is how they will figure it out. What is the total direct labor cost for job number 603? So now you will see how it will look like after filling all those information. So when they will have all those cost informations for all of their direct materials, it shows that the total cost of all those direct materials that will be used for job 603 is 40,000. And the total amount of direct labor cost, which is based on different employees, and they spend different number of hours, they have different wage rates. When they're gonna calculate all of those employees who were involved in that job, then it shows the total direct labor cost for job 603 is 10,000. Now they need to calculate manufacturing overhead cost. You know what? For direct materials and direct labor, these are very easy to trace it out. And to calculate this cost, they just need to figure it out all those materials, their costs, and their employees who are involved there, what are those wage rates. So these are kind of easily traceable, and these are very directly related to this job. But manufacturing overhead is a little bit complicated, because manufacturing overhead, you will see those are kind of combined costs. You really cannot trace this out. You will find like a lot of indirect labor, indirect materials, or some other type of plant or factory related costs. So it is really difficult to trace it out. What is the total amount of overhead cost for job 603? For example, we can remember from our previous chapter that indirect labor is one example of manufacturing overhead cost. Indirect labor means they may have security guard for the factory. Remember, the security guard or the janitor who is cleaning the factory, they are not directly related to the production process, but of course they are part of the factory. They are working for the plant, right? So the cost that the company is paying to those indirect labor are part of the manufacturing overhead cost. Now, if the company pays, say, for example, $1,000 every month for their security guards perspectives, now what will be the security guard cost or indirect labor cost for job 603? You know, it is really very difficult to trace it out. Or I can give you another example. Say, for example, the company pays insurance or tax, the production or factory related tax, plant related tax. So they actually pay one in a big bulky amount. So it is difficult to split it up and to trace it out and to assign how much insurance they are paying for job 603 or how much income tax cost I can assign for job 603. And that's why calculating manufacturing overhead is a little bit complicated. So in this chapter and in next few chapters, we will find different ways to calculate manufacturing overhead cost. So the first way we are learning in chapter 3 is this, where you need to calculate one predetermined overhead rate. MOH means manufacturing overhead rate. Again, I mentioned that manufacturing overhead costs includes those items, those are kind of big joint costs, and it's very difficult to split it up or to trace it out for some specific product or for a specific job. So what manufacturing companies usually do? They actually estimate their total amount of manufacturing overhead cost, and it could be for a certain period, and then they determine one specific allocation base. So what is allocation base? Allocation base is basically a cost driver. Right, it could be anything. It could be your machine hour, it could be your labor hour, it could be your labor cost. So they first determined what will be their total estimated manufacturing overhead cost and what will be their total estimated amount of allocation base. Right. Remember, this is one fraction and the top part or the numerator is your total estimated overhead cost and the denominator is your total allocation base. This is how you need to calculate your predetermined overhead rate. So this is the equation, number one equation you need to know. Once you know what is your predetermined overhead rate, then you can use that predetermined overhead rate to calculate your assigned or allocated overhead for a specific job. Once you know your predetermined overhead rate from the previous formula, then you need to multiply it by the actual amount of your allocation base or cost driver. When you are multiplying these two factors, one is your predetermined overhead rate and another is your actual amount of allocation base, you will find your manufacturing overhead cost, which is kind of assigned or allocated, right? So you are assuming or allocating one amount of cost for a specific job where you are using the actual allocation base and predetermined overhead rate. Now let's see one example, then I believe you will feel much better. For example, the total estimated manufacturing overhead cost is $1 million and they decided that the allocation base is direct labor hours. Remember, allocation base means some sort of cost driver, which will drive the cost, and it's up to the company whatever the allocation base they want to consider. Usually, companies consider direct labor hours or direct machine hours or sometimes direct labor costs. And it is really very important to figure it out what is the cost allocation base. So whenever you will solve any problem read the problem very carefully and check it out what is their cost allocation base. So first we will calculate our predetermined manufacturing overhead rate. PMOHR. I hope you will understand. It's predetermined manufacturing overhead rate. And the formula is the upper part, or the numerator is the total estimated overhead cost divided by your total estimated amount of allocation base. Remember, when you are determining the predetermined rate, both the numerator and denominators both are estimated and both are total. So at the beginning of the period, you are estimating what will be your total overhead and what will be your total allocation base. And it's for all of those jobs that you are going to do. Once you divide these two, you will find your predetermined manufacturing overhead rate. It's kind of estimated or predetermined. And the rate is $16 per labor hour. The company decided that their cost allocation base is labor hours, and the predetermined manufacturing overhead rate is $16. That means if their labor force worked for 1 hour, their allocated overhead cost will be $16. If their labor force worked for 10 hours, what will be their allocated overhead cost? 16 times 10. So at the end of the year, they will take what is their actual amount of allocation base. So their labor force actually worked for 500 hours. This is their actual allocation base, 500 direct labor hours. So their predetermined rate was $16 per labor hour, and their labor force actually worked for 500 hours. So if they multiply these two, they will figure it out. Their manufacturing overhead cost for job 603. Remember, this 500 direct labor hours is for job 603. So I'm repeating the process. You need to know two formulas, and you need to calculate your predetermined overhead rate first, where both parts are total and estimated. Once you know the predetermined overhead rate, then you're going to multiply those rate by your actual amount of allocation base for that specific job. In this example, we know our total estimated overhead costs and total direct labor hours. This is how you got your predetermined overhead rate. And you know, for this job, what we are talking to the job 603, their labor force actually worked for 500 hours. That's your rate per hour. And you multiply these two, you'll figure it out, your allocated manufacturing overhead cost. Now you will fill up this sheet. So we already had our direct material cost and we figured out our direct labor cost. Now by using those two formula, we just calculated our manufacturing overhead cost, which is $8,000. Remember, for any manufacturing company, for any manufacturing process, there are three types of costs. What are these three costs? Number one is direct material cost. Number two is direct labor cost. Number three is manufacturing overhead cost. So we just figured out our direct material cost, direct labor cost, and manufacturing overhead cost for job 603. And the total cost for job 603 is 58,000. And for this job, what we did, we actually produced 50 cross trainers. So this total cost is for 50 cross trainers. If I divide it by 50, we will figure it out what is the cost per cross trainer, which is really very important for a manufacturing company. They really need to know how much it takes to manufacture one product, because this product is really very unique, customize. They need to figure out all those costs very precisely. They just cannot average those costs because the products are very unique and different from other products. Right. So this is how we got the manufacturing overhead from our last discussions where you used two formulas. Now you can imagine the picture. Here again, I'm repeating because this is the thing you really need to remember throughout the semester. For any for any production process, you need to know three types of costs: direct material cost, direct labor cost, manufacturing overhead cost. And these all three together, you have to involve all those costs, and then you need to produce your products. This is how you got your finished goods, and then you have to figure it out how many goods you are selling, and then based on those goods you will check what was the cost of those goods. Right. Now, why managers need to know those product costs? Because if managers see that the costs are going up, they can easily figure it out. What is the main reason that our costs are so high? Is it because of our wage rate is high, we are paying too much, or we are buying raw materials at a higher price, or our overhead is also very high? So if they decide to reduce any future costs, definitely they need to know each and every cost very precisely. And of course, when they determine the price, of course, they should have some markup. For example, if I go back here, each cross trainer costs how much? To produce each cross trainer, it took $1,160. So, of course, when the company will sell those cross trainers, they have to sell it at a higher price, which should be higher than this production cost. And of course, they will have some other costs like marketing, advertising costs, sales or promotional costs. They need to consider all those costs too. So for pricing decisions, it's also important for the managers to know the cost. And of course, for competitors' perspective, sometimes if other competitors offer a lower cost, then managers will also look at their own cost structure and they will decide whether they need to reduce the cost or not and to what extent they can reduce the cost, right? And you will see that several times many companies can give you some offer, sale, 50% discount. You know what? They of course will give you some offer, discounts, right? But whenever they will give you some discounts, of course they will have certain cost in their mind and they will never go below that cost. And for each and every manufacturing company, they need to know their cost of goods sold. And to know the cost of goods sold, again, you need to know three types of costs: direct material cost, direct labor cost, and your manufacturing overhead cost. So to produce the financial statement where you need to produce an income statement, you need to know all those costs. Now I will give you one more example. In this example, the company Fed Corp uses direct labor hours as their allocation base. Remember, it is really important to know what is the overhead allocation base for the company. And I already mentioned, I am repeating, it could be labor hours, it could be labor cost, it could be machine hours. In this example, their overhead is based on direct labor hours. So we need to know what is their total estimated manufacturing overhead, which they gave you, $200,000, and what is the total amount of their allocation base. That means we need to know what is their total estimated labor hours, which is also given that the total estimated direct labor hours are 10,000. Now we need to calculate the predetermined manufacturing overhead. You remember the formula. You need to know both estimated items. One is the total manufacturing overhead cost divided by the other item, which is your total amount of allocation base. And in this example, it is direct labor hours. So we know these two items, total estimated manufacturing overhead cost divided by total amount of estimated labor hours. And by this division, you know that their predetermined manufacturing overhead rate is $20 per labor hour. So for a specific for a specific job, they could easily figure it out what is their allocated overhead cost. Now, they may have different type of jobs. It's not that the company will do only one job throughout the year. They may have 5, 10, 20 types of jobs. And then they will calculate all of their allocated overhead costs. Now, they figured it out that throughout the year for all of their jobs, they actually used 11,000 direct labor hours. This is at the end of the year. This is the actual thing. Remember, when you calculated the predetermined manufacturing overhead rate, you used both estimates. But now it's end of the year, you know what is your actual amount of allocation base. So they actually had 11,000 direct labor hours. So now, if you would like to calculate what is their manufacturing overhead allocated, this is the rate. This was $20 per direct labor hour, and for all of their costs throughout the year, their actual labor hours is 11,000. That means their allocated manufacturing overhead cost is $20,000. We call it allocated manufacturing overhead cost because this cost is based on some predetermined rate. It's not the actual overhead cost. Now, the managers can do one thing. They can actually check what is their actual overhead. They know all the components of their overhead cost. It could be their indirect labor, indirect material, or any plant or factory related depreciation, insurance, whatever. So, this company, Fate Corp, figured out that their actual overhead is 190,000. But when they allocated the overhead using their predetermined rate, they reported and they recorded that their overhead is 220,000 and there is a difference, 30,000. That means you can see the allocated amount of overhead cost is higher than the actual amount of overhead cost. Then what does it mean? It means that they actually over allocated or they actually overestimated their overhead costs. It can also happen. The situation could be the other way around. You can also underestimate or underallocate your overhead costs. And that's why you really need to check at the end of the year. Now there could be several reasons why did you underallocate it or over allocated. Uh, so you can go over all those slides to know all those reasons. But to recap what we learned in this chapter, we learned two equations. I'm going back. These are the two equations. Number one equation, you need to know how you can calculate predetermined overhead rate. And then you need to calculate your allocated overhead cost for a specific job. And these are the two formulas you need to know. And you know the background story of it. All of you watched the video and you also took notes when you were watching the video. So here is another video. It's from the publisher's website where you will see some real world examples that the companies are using the job costings for their production process and their manufacturing cost recording purposes. So this video is a bit long and it may take a little bit time to download it. If you have time, please download the video and watch it. So what's next? So you just learned about the concept about job costing. Now we need to practice some problems. So in my next video, I will solve a couple of problems from chapter 3. You will watch those, and when you will be watching those practice problem solving videos, you will also take notes. You will also solve the problems with me. And don't forget to do the homework. I'll give all of those instructions in my next video. Thank you very much.